Hej och välkomna till vår webcast här idag där vi ska prata om trendspaningar för family offices. Det är jättekul att så många har anslutit och det speglar ju verkligen det stora intresset vi ser på det här området just nu. Jag heter Carl Wattrang, jag är partner i vårt Asset and Wealth Management team här i Sverige. Och vi jobbar ju brett med frågor för privata och institutionella investerare kopplat till kapitalförvaltning. Med mig här idag har jag Annika.
Ja, Annika Svanfeldt heter jag. Jag är partner på vår skatteavdelning och jobbar med entreprenörsledda och privatägda bolag. Och har gjort det i de senaste 15 åren. Jag är också ansvarig för vårt tjänsteområde Entrepreneur Tax Services. Och i den rollen så kommer jag ofta i kontakt med familjer och entreprenörer som vill ta lite större grepp kring sin familjs förmögenhet. Och tänka lite kring framtida generationer. Och det är det lite grann vi ska prata om idag, det här med family offices. Men vad menar vi då när vi säger family office? Det kan ju ta sig med ganska många olika former, men gemensamt är att de förvaltar kapital för en eller flera familjer för framtida generationer. Och på PwC så arbetar vi ju brett med allt ifrån enskilda entreprenörer som kanske efter en exit vill börja bygga en framtid för framtida familjer. Eller om man då redan har en etablerad organisation och jobbar med att då bredda sina investeringsstrategi. Och inom PwC så är vi ju mer än 5000 personer globalt som jobbar med den här typen av frågor kring family offices. Allt ifrån strategi, transaktioner, hållbarhet, digitalisering, cybersäkerhet. Och idag har vi bjudit in våran kollega Johannes Rettig från PwCs kontor i Tyskland. Och han är PwC Family Office and Deals Leader för EMEA. Och han ska ge oss lite uppdateringar kring vilka marknadstrender vi ser på global nivå. Och vilka spaningar han gör avseende våra svenska family offices. So Johannes, welcome.
Yeah, thanks very much, Annika. I'm Johannes Rettig, as you said, a director in PwC's family business team. As EMEA Family Office and Deals Leader, I support our practice worldwide and especially in EMEA with regard to family offices, the investment strategies and the transactions they execute. In response to requests from our colleagues in PwC's deals team, we've been focusing in recent years on developing deeper insights into investments and deals conducted by family offices. Lately, we've refined our focus to explore family office investments in three key asset classes: startups, direct investments, M&A, and real estate. As we'll hear today, family offices are increasingly important players globally in the investment markets, as the balance they strike between these different asset classes continues to shift and evolve. Fortunately, we at PwC have the comprehensive global data needed to bring us rich insights into family office deals. We've been researching family office for well over a decade. During that time, we've built up a database of more than 7,500 family offices worldwide to fuel and inform our analysis. Where are those family offices located? As you can see, the bulk of them are in North and South America, followed by Europe and Asia Pacific. Then we have smaller concentrations in the Middle East and Africa. Within Europe, Sweden has a thriving community, or you could say industry, of some 148 family offices. The global database containing this information is a truly unique resource that isn't replicated anywhere else. And it's PwC's proprietary intellectual property. It enables us to generate some fascinating and valuable insights, like the fact that family offices in Asia Pacific manage the largest median assets, and that half of family offices manage assets of at least $1,138 million. Before I take you through our latest findings on family offices deals worldwide and go on to explore the trends in Sweden, let me define exactly what we mean when we talk about family offices. First, the view that they are all the same is incorrect. Academics have historically grouped family offices into 4 categories: single family office, multi-family office, embedded and virtual. However, over time, real-world practitioners have seen several other family offices emerge, each with its own distinct approach, structure, and strategy. These include principal or family investment offices, principal or family investment funds, family investment holdings, and family business venture arms. In each case, the defining characteristic is that family wealth is the ultimate source of the capital being invested, which is why, for the purpose of this analysis, we include all of these types of entity in our definition of family offices. Another common misconception about family offices is that most of them are created through a cash event, such as a company sale. In fact, this applies to only 20% of family offices. For the other 80%, the original family business is still active as a source of wealth. In terms of ownership, the vast majority of family office owners have an entrepreneurial background in their own right, and just 5% are heirs. There's also a growing proportion of family offices owned by tech titans or hedge fund managers, the so-called Wall Street billionaires. This background of heritage can influence where and how they invest. Finally, looking across the universe of family offices that we've analyzed, more than 75% have been established in the past 33 years or so. So they are mostly quite young entities.
As you say, family offices have clearly seen a tremendous growth in the last decades. What do you see is driving this development?
Yeah, I would say several factors contribute to this phenomenon. First is rising global wealth. The growth in the number of family offices mirrors the increase in global wealth over the past decades. Events like the dot-com boom and the proliferation of tech startups have created more millionaires and billionaires worldwide. The second is distrust in banks. Since the 28-29 financial crisis, there has been a lack of trust in banks. Family offices tend to prioritize wealth owners' interests, while banks often focus on the issuers of financial products. Additionally, many family offices offer comprehensive services, including advising on wills, succession planning, taxes, gifts, and investments. The third is complexity of wealth management. The recent low interest rate environment, volatile financial markets, and geopolitical instability have compelled wealthy families to seek better returns. This drives them to explore more complex investment options, such as private equity, real estate, and hedge funds, often in international markets. Managing this complexity demands sophisticated wealth management and coordination, which can be overwhelming for a single advisor or family member. The fourth element is cross-border assets and families. As wealthy individuals diversify their investments globally, families themselves span borders, with members studying, working, and residing far from their home country. This can lead to complexities related to varying tax and reporting regulation. Many opt for family office to avoid the risk of inadvertently violating local tax laws. And the fifth is estate planning. Many wealthy families choose family offices to aid in estate planning, aiming to minimize the impact of inheritance and wealth taxes on future generations. In summary, the growth of family offices can be attributed to the rise in global wealth, distrust in traditional banking institutions, the complexity of modern wealth management, the global nature of assets and families, and the need for effective estate planning.
So Johannes, family offices are a rather unique class of investors, right? And their importance is in many ways growing. What do you think sets them apart from other investors?
Yeah, in my opinion, the growing importance of family offices as investors can be attributed to 5 key factors, let's say it that way. The accumulation of wealth. Wealthy individuals and families have accumulated considerable resources over the past decades, enabling them to establish and maintain family offices for wealth management. Second, tailored strategies. Family offices tailor their investments to their individual goals and values, resulting in more meaningful and successful ventures. Third element, long-term perspective. Family offices have a longer investment horizon and are willing to hold assets for generations, which is an advantage in less liquid or alternative investments. Industry knowledge is also important. Access to specialized industry networks and expertise enables family offices to identify and exploit unique opportunities. And the fifth, a sense of responsibility and legacy. Families view their wealth as a legacy to be preserved and increased for future generations. This leads to practical investment decisions that are focused on values and long-term goals. In summary, the increasing importance of family offices as investors is based on significant wealth, tailored strategies, long-term focus, industry knowledge, and a commitment to preserving and growing the legacy. This approach enables them to navigate the evolving investment landscape effectively.
So PwC will be releasing a global family office and deal study shortly. Would you mind telling us a little bit more about the results of that study and the trends and developments we see?
Sure, happy to do so. Yeah, let's start at the macro level. Family offices are displaying increased sophistication, professionalism, and risk appetite. Enhanced governance and professionalism enable them to make smarter, more sophisticated investment decisions, weighing the balance between potential risks and returns. For instance, they are relocating capital from real estate to high return startups while maintaining a significant focus on direct investments. Another topic in direct investments and M&A, they pursue smaller and club deals to manage and share risks effectively. This shift involves reducing involvement in large deals, adopting club deal structures, and targeting tech-driven industries like computer software and services, with a particular emphasis on the US and India. In real estate investments, family offices adopt an adaptive and opportunistic approach. They pivot toward a combination of smaller and strategic larger deals, selectively utilizing club deals to mitigate risks. High-end hotels and Paris real estate are key focus areas in Europe as overall real estate investments reach new highs. Regarding startup investments, family offices exercise selectively, commit larger investments, and share risks. Despite a decrease in volume, they increase average deal sizes and heavily utilize club deals. Their focus extends to high potential sectors like software as a service and artificial intelligence and machine learning, maintaining significant share of deal value in mobile and fintech. The US remains the dominant target market for cross-border startup investments, while Europe becomes less attractive. This approach reflects a calculated response to the high risk, high reward nature of startup investments. I now take you through the main findings from our latest global family office and deal study, which we are publishing this month. I urge you to read it in full, since it provides a more accurate and detailed picture than ever before of how family wealth is being invested across the world. Our most striking top-line finding is that there has been a sharp global decline in both the volume and value of family office investments since the beginning of 2022. Here you can see the number of investments by family offices globally in each year over the past decade. What's clear is that there was generally rising deal activity in terms of volume and value of the 8 years to 2021, when both surged to a peak. But this spike was short-lived, with both the volume and value of deals falling back sharply in 2022, and the decline continuing into the first half of 2023. The effect is that both the volume and value of deals have now slipped below the low points they recorded in the first half of 2020 at the start of the corona pandemic. In combination with the changes in the volume and value of deals, we're also seeing shifts between the asset classes family offices are investing in, with their deal volume globally moving away from real estate and towards startups. As our research confirms, this change of focus is a long-term trend. Up to the end of 2016, family offices worldwide invested most frequently in real estate. But after a brief period of equilibrium in 2017, the beginning of 2018 saw the balance move decisively towards investments in startups, which has stayed ever since, including during the overall decline in deal numbers over the past 18 months. At the same time, the proportion of family offices deals going into direct investments has been on a broadly rising track since mid-2015, reaching a new all-time high of 15% in the first half of 2023. While startup investments now dominate family offices deals by volume, the story on value is quite different. As this chart shows, direct investments continue to account for the largest proportion of money flows, while startups have largely been gaining ground in terms of deal value. Over the years from 2013 to 2020, family offices usually invested most of their capital, with a few exceptions, in specific periods, in companies via direct investments M&A, followed by investments in real estate. However, in the second half of 2020, the tide turned in favor of startups. And since then, startups have consistently ranked second on deal value behind direct investments. Now let me come to an outlook for Sweden. So those are the main trends we are seeing in family office investments at a global level. For more detail, please see our full analysis. But what's happening in Sweden and what are the implications for the future? Drawing on our findings, here is our perspective on these questions. This chart shows the volume and value of family office investments in Sweden over the past decade. As you can see, deal volume and value in Sweden have suffered a similar sharp decline to the trend we noted globally. But with the all-time high in the second half of 2021 being followed by a much faster slump in the first half of 2022, as the number of family office investments plunged sixfold. However, after a further small fall in the second half of 2022, deal volume has registered a modest rebound in the first half of 2023, possibly pointing to a forthcoming recovery. In terms of value, the total value of family offices investments in Sweden plummeted by 75% in the first half of 2022, but then rebounded threefold in the second half, only to plunge once again in the first half of 2023 to its lowest aggregate value since 2018. A further distinctive trend in Sweden is that family offices are moving away from investments in startups, with real estate deals becoming increasingly dominant. This is a contrast to the global pattern that I highlighted earlier, which is towards more investments in startups. In fact, the share of real estate investments made by family offices in Swedish market rose to its second highest level on record in the first half of 2023. And the same period saw the value of family offices' real estate investments reach an all-time high of 61% of all their investments in Sweden. The shift from startups to real estate is reflected in the proportion of investment in Swedish startups contributed by family offices. After reaching a historically high share of 77% in the second half of 2022, family offices' contribution to the total capital invested in Swedish startups fell to only 40% in the first half of 2023. On average, 47% of Swedish startups are financially supported by family offices. Meanwhile, family offices accounted for more than 20% of all capital invested in real estate in Sweden in the first half of 2023, supporting on average 4.7% of real estate investments in the country. Turning to the size of deals being conducted by family offices when investing in Sweden, the trend is towards them targeting smaller deals rather than larger ones. In the first half of 2023, our analysis shows that 4 out of 5 family offices deals in Sweden were small transactions, defined as those with a value of less than $25 million. Over the same period, only 3% of their investments were large transactions of between 100 million and 500 million US dollars. This is the third lowest level in the past decade, above only the first half of 2016 and the first half of 2017. Meanwhile, looking across all the asset classes we analyzed in the first half of 2023, we could find no sign of family offices being involved in any mega deals, defined as those with a transaction value of more than 500 million US dollars. Our analysis also looks at the proportion of club deals where family offices co-invest in share risk jointly with other investors, as opposed to sole deals where they invest alone. Here, it's interesting to note that for family offices investing in Sweden, sole deals dominated strongly during the investment boom of 2021. However, immediately afterwards, in the first half of 2022, this pattern was reversed, with 4 out of 5 family offices deals in the Swedish market being co-investments with other parties. Since then, the balance has steadily shifted back towards sole deals, with only a third of family office deals in the first half of 2023 being co-investments, the third lowest proportion in the past decade. The implication is that family offices are increasingly acting opportunistically, and that when the right investment opportunity arises, they are happy to take it on their own. Here we break down Swedish family offices investments between outbound cross-border investments in other markets by family offices located in Sweden, inbound investments into Sweden by family offices based elsewhere, and domestic in-country investments. What stands out there is that at 57% in the first half of this year, the share of investments by foreign family offices in Sweden has reached its highest level of the decade. Conversely, The volume share of Swedish family offices investing in the domestic market has fallen to only 30%, the lowest proportion since the second half of 2013. The clear message appears to be that Swedish market is highly rated by family office investors, both worldwide and within Sweden, as only 13% of Swedish family offices have sought out investment opportunities abroad. I now call out the main trends in family office investments in Sweden in the three key asset classes of startups, real estate, and direct or M&A deals. First, startups in terms of the leading sectors that family offices favor when investing in Swedish startups. Our analysis shows they invest most frequently in software as a service, followed by fintech and cleantech. However, between 2021, 2022 and 2022, 2023, the only startup sector seeing an increase in deal volume was health tech. Meanwhile, in terms of total deal value in Swedish startups in 2022, 2023, family offices invested the most capital in three verticals: climate tech, which received family office investments totaling $7.2 billion, clean tech at $5.8 billion, and manufacturing at $5.0 billion. In Swedish real estate investments by family offices, the predominant trend this year is towards industrial assets and away from office real estate. As the chart shows, between July 2022 and June 2023, family offices real estate investments in Sweden have gone primarily into industrial properties. And in terms of value, the size of the checks they've been writing has also risen sharply. A year earlier, things looked quite different. In 2021-2022, family offices' most frequent investments in real estate were in office properties, followed by industrial and then retail assets. However, industrial properties were already dominant in terms of total value. Turning to family offices' direct and M&A transactions in Swedish market, the period from July 2022 to June 2023 saw them invest most frequently in software companies, overtaking service companies, which were the most popular the year before. However, they put the highest share of their capital into real estate companies, with software companies ranking second in terms of total deal value. So that's my whistle-stop tour of our latest analysis of family office investments at both a global and Swedish level. Thanks for listening. Now over to you, Annika and Carl.
Thank you so much, Johannes, for your insights. They're really interesting to hear. Where do you see family offices in the future? Will they continue to have an important role as investors?
Yeah, as I mentioned earlier, many investors are very cautious at the moment, but this is exactly where I see the opportunity for family offices. Due to their opportunistic approach, they can now focus on the real jewels, and thus I expect family offices to invest very selectively in all three asset classes presented and to seize their own opportunity.
Thank you, Johannes, for joining us today and sharing your insights. Och stort tack till alla ni som lyssnade in. Om ni är intresserade av mer information om den studie som Johannes nu har gått igenom eller hur vi jobbar kring family offices, så får ni jättegärna besöka oss på pvc.se eller kontakta såklart mig eller Carl eller Johannes direkt. Stort tack för idag.
Tack.